Good morning. This is Tom Alexander. It is Saturday, December 2nd. It is about 9:36 a.m. Eastern Time in beautiful Savannah, Georgia. Welcome to this week's weekly auction market, stock market update. If you find value in this video, please subscribe, please like the video, and let's discuss now where we are from an auction market condition perspective in the market. Well, it's very clear. We're in vertical development to the upside in all four of the primary U.S. stock indices. We're coming off of a historic November. The market has been straight vertical. Let's take a look at the charts and we'll discuss this further and from a couple of different perspectives. Okay. Let's start with the SPX. The SPX is up 12% off of the October low, just dead vertical. We've had one minor retracement that lasted a few hours of about 1%. Now, this is quite a ramp higher, but what is extraordinary about this ramp is the fact that we've only had one multi-hour retracement of 1%. Now we may trade to new all-time highs by the end of the month, before the beginning of the new year. That would not surprise me at all. As a matter of fact, and we're going to look at the Dow in just a minute, I fully expect the Dow to at a minimum. But even if we do, what would be quite extraordinary would be if we continue higher and we don't get anything more than a half a day decline of 1%, which is basically what we've had so far in terms of retracement, in terms of balance. It's highly unusual. I'm going to show you another view of that in just a minute. It's just not normal. Now here is the Dow. Since I've talked about the Dow, this is the all-time high. So we're less than 2% from an all-time high in the Dow. If we have 2 days, if Monday and Tuesday are of the same magnitude to the upside as were Thursday and Friday, we'll be at a new all-time high on Wednesday morning. So could that happen? Absolutely. Could it happen? Absolutely. There is incredible momentum to the upside here. I do believe that any retracement in December is going to be bid. It's going to be bought. There are enormous reasons and headwinds or tailwinds, I should say, for the market to be up into the end of the year. Now, that's barring some exogenous event. But as long as we don't have some exogenous blow up, pun intended, somewhere around the world, this market is going to be bid into the end of the year. Now, I don't think it's going to be as vertical as it has been. We all know anything can happen. I've been trading almost 40 years, and I have learned that just about the time I see something that can't happen, it happens. So we're always dealing in probabilities. You never want to bet the farm on any one thesis, etc. But I do think this market is way overdue to become more two-sided than it has been. And it's not unusual for markets to get whippy around important levels. Now, the Dow, you can see, is less than 2% from an all-time high. So you have everyone and their brother expecting it, including me, expecting this high to be taken out. So it wouldn't be a big surprise to see this market get whippy and then take it out. There's plenty of time for that. Now, to go back to the S&P, the SPX, we're right at, now this is a closing year high, but the print high is up here. But it's, again, I'm alert for some whippy type of action to begin because the SPX and the Dow are at such critical levels. Let's look at the NDX. Now, the NDX is also only about 3.5% from an all-time high. We had a little bit of pushback, a little bit of two-sided trade last week. It has actually experienced the largest drop percentage-wise of any of the indices so far off of the August low. Not that it was any big deal. Let's just see how much it was. so far. So this was the high, this was the print low. Okay, 2%. And, that lasted again about a day. All right, let's look at the Russell. The Russell is beginning to participate, which is a bullish sign. Now, the Russell, if you look, is in a massive multi-month balance area, and it's in the middle of that balance area, but the recent trade is strongly higher. This is showing participation. This is net bullish. And again, I would, with the Russell showing the strength, everything is in place for this market to ultimately be higher at the end of December from where it is now, regardless of what happens between now and the end of December. Now, I would not be pressing, and I'm not pressing the long side of this market here. I just can't do that. I'm going to show you why here. Okay, this is the profile view. Now, market profile was designed first and foremost to help visualize auction market condition. And that's its highest use. It's not a magic tool that dictates what has to happen. Now you can get, again, we're dealing in probabilities, and as far as predicting is concerned, there is something you can predict, and you can predict when a market condition becomes mature, it's going to transition into the next market condition. There are two market conditions. There's vertical development, there's horizontal development. It is a fact. The market spends most of its time, even in trends, going net sideways. Now, what have we done since the end of October? Well, we've gone basically straight up. This is about as vertical. Now, each one of these profile units is 1 month of trade. Each letter represents, if I split it out, this is 1 day of trade. So you can see we've basically been dead vertical, but we have these minor pockets of balance that are occurring. And actually, we're coming out of one now. So this is typical auction market development. You always have this 3-step process of development in effect in all degrees of time, all the time. Now, the steps 2 and 3 have been extremely minor and have included very shallow retracements. So, I expect that to change. I expect to see a deeper retracements at some point along the way during the month of December. If I'm wrong, then the market is going to continue to do this. It's going to go vertical, rotate in a narrow range within a 1% range, go vertical, rotate within a 1% range, go vertical, etc. But you can see here, as vertical as October was, you did have these pockets, minor pockets of balance. And you can also see that beginning back on, I think this is November 14th, the market has become more two-sided. So even though this ramp that is just relentless to the upside, it seems like day after day, the trend is slowed. Time regulates price. Price is being regulated. Even if it's being regulated in a narrow range, it is being regulated. The trend has slowed, and I think we're going to see deeper retracements, but that's a guess. Now I want to show another view. Let me remove the split. So this is an extraordinarily vertical structure. If you go back and you scan through your charts, you will see that the commonalities of these auction structures are, regardless of their shape, there is always a area of there's a high volume node. Now the little dotted magenta lines that you see here, that's the 25%. I don't use a standard value area. Standard value area, the 67% range in a given chronological constraint of the profile is worthless. 25% is much more accurate in terms of identifying where trade was most facilitated. And you can see we have this migration of value higher, and the volume node of the month of November was still extremely minor. Now we're in December now, so we shall see. But you can tell if you scroll back through here, the overwhelming pull of the market is basically rotational. Now, within that rotation, there's a migration of value, and it's certainly higher now. Now I want to show a longer term view. What I'm going to show now is the quarterly view of the auctions. This is actually quarterly, so just ignore the labeling. Now this is off, excuse me, this is off the 2022 low, October a year ago. And you can see this very persistent migration of value higher. Now, actually, we have closed now up here. I have to spread this out. So we're trading above now last month's high volume node, but you can see how vertical the quarterly structure is so far. So could we go higher from here? Yeah, we could go higher, but what will happen? Whether it's, and you're guessing, we're going to end up with a volume node of something like this. Now, is it going to be here? Could it be here? Could it be up here? Yeah, all of those things are possible. But what it is going to require is for the market to become more two-sided in all of the time frames. So we'll see. Now, could the market just go absolutely dead vertical into the end of the year? Yes, it could. But if it does, then what that portends is a grinding, even larger volume node that will develop. And, of all the things that you can predict, this is the most predictable. Now, is that helpful from a trading perspective? That depends on your trade strategy and your tactics. There's no one rote way to trade. My time frame as a trader, I trade intraday, and long term for me is 2 weeks, 3 weeks, just FYI. But if I had to take a trade today that worked by the end of the year, I'd go long right now. But again, that's not my time frame. I am going to be looking for some sort of retracement and trading what I think will be the development going forward into the end of the year. I digress. Apologies. All right, let's look at the technicals. Now, what you see here, in case you're new to the videos, I use real simple things. I use auction market principles, and the only other thing I use that would be that isn't directly the market. I guess it really is directly the market. It's just a different perspective. I use NYSE data, actual trade data, what buyers and sellers are doing. The red line you see here is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues, and below you see breadth. Now, I remarked in a member report on Thursday that breadth had been rather tame, both up and down. Well, we got the spike up again in breadth. We have the 5-day moving average that is continuing to diverge against this momentum peak. I don't think we'll see this momentum peak taken out. The 10-day moving average has made a higher high for the past, 10 months. It's above any high since, it's the highest level it's been since July. So that's not 10 months, 6 months, 5 months. And it's sloping higher. I pay more attention to breadth on a day-to-day basis and the 5-day moving average than I do the 10-day. This is blunt instrument information. Now, let's go down in time frame to a 30-minute perspective. And what you see here, this is the cash market. This is the SPX. This is breadth under it. We are way overdue for an excursion, a contraction in breadth down into this level. Now, there is a very consistent relationship between price and breadth and bull legs and bear legs. And in bull legs, when you get down into this level, you typically are near a short-term low. And it's critical to watch what happens to price when breadth contracts. Now, price, as you can see over here, does not have to follow breadth dramatically. And if it begins to, then what it's doing, it's alerting us to a potential change in trend of relative significance. But when this market gets down in here again, and it will, probably next week at some point, then what we want to do is take a look and see what price is doing. The market is making higher highs and higher lows. It's very, very clear. And as long as it's doing that, the trend is up. Now, this is the latest pivot low. This was well, that's not what I wanted. So you can just follow the market higher, until these levels begin to be taken out to the downside, the trend is up. It doesn't have to be complicated. You can assign any sort of attribution you want to, fundamental, technical. The reality is it is as simple as the market making higher highs and higher lows, and then you can fine tune it from there. I'm not going to chase this market based on all the things that I'm sharing with you, not the least of which is the fact that I think this is another momentum high that we set in last Thursday and Friday here. And now we're going to get a contraction down here that will not only represent a contraction in breadth, but you'll have some sort of retracement in price. That will be the next opportunity in my mind. We cover this stuff in the live room in real time every day. I hope you guys have a great weekend. I'll speak with you again soon.